FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And welcome. You're listening to the Financial Survival Network. It's Kerry Lutz, and with us is Nick Barisheff. You know him well, author of $10,000 Gold, Why Gold's Inevitable Rise is the Investor's Safe Haven. I don't think Nick's backed off from that prognostication one bit. He's also president and CEO of Bullion Management Group, Inc., aka BMG, company dedicated to providing investors with a secure, cost-effective, transparent way to purchase and hold physical bullion. And if you've been reading about the war on cash lately, well, gold might be your only way to effectively, physically hold wealth in your hands. And Nick is here to talk about what's happening with China, potentially big news on their gold holdings. Hey, Nick, welcome back. It's great to talk to you.
Pleasure to be back, Kerry.
So China, gold holdings, we haven't heard anything about them. I think it's been 6 years, but moment of truth is coming, isn't it?
Well, that's right. In the past, they've reported their gold holdings about every 5 years. And the last time they reported was in 2009. Now, at that time, their holdings went from 400 tons to 1,054 tons on that announcement. And since that time, there haven't been any reports. Now, the way China does it is when we talk about China's reported holdings, that's the holdings of the central bank. And the central bank reports those holdings to the IMF. But they acquire the bullion through their sovereign wealth fund, and the sovereign wealth fund doesn't report to anyone. So the accumulation of gold since 2009 has been taking place at the sovereign wealth fund level. And the thing to remember is China is the number 1 gold producer in the world now. And they do not export any gold, so all the gold produced internally is consumed and used internally by retail investors or the central bank.
Right.
So in addition, they've been importing a lot of gold from the Western countries.
How much?
Through Switzerland.
Didn't mean to interrupt, but how much do they produce annually? It's like 400 tons. If memory serves me correct, is that right?
That's right, something in that order, and that makes them the largest producer in the world ahead of both South Africa and Russia.
And the U.S. does around 250 tons, something like that?
That's right. What's interesting in the U.S. statistics, if you go to the U.S. Geopolitical survey, the annual mine production in the U.S. is about 235 tons, but the exports are 692 tons.
Where's the missing gold from? Where in the world is Carmen Sandiego, right?
The only place that can come from is the central banks.
And, well, we got some from scrap, obviously. Another 100 tons worth of scrap, say, reasonably?
Yeah, but the thing is that the scrap is just remelted, made into jewelry, so it's kind of like a zero-sum game.
Right.
It used to be relatively in balance. If you go back to 2002, the primary production was about 298 tons, and the exports were 257. So that's kind of a more of a balanced, statistics. But since 2007, the U.S. has exported 3,000 tons while producing 1,390 tons. So that's like a 1,600 ton differential that they've exported. So that's a sizable amount.
There's definitely, we don't know where it's coming from. Is it getting imported, re-exported?
It's a pretty safe thing. Like, everybody knows about leased gold. Okay, a certain amount of gold is leased. But we don't have any statistics on the amount. Now, if you go back to something like 1997, 1998, the IMF used to do supply-demand statistics then. And what they used to do was they would take the outstanding leases on January 1st of any given year. Then you would add the new leases that were issued during the year and subtract the leases that were repaid. And then you get a new number on December 31st. If that number was positive, which it has been for 15 years at least, then that positive number needs to be added to supply. Okay?
Correct. Yeah, I'm with you.
Okay, so, but the trouble is today, when we have the kind of the mainstream supply-demand statistics, there's no line item for leased gold forming part of supply. And we all know that it's not zero. Some of the estimates are as high as 1,500 tons a year. Frank Veneruso did a study in 1998, where his estimate in 1998 was that there was 8,000 tons of outstanding leases from the central banks. In 2002, he updated that study and estimated there was 16,000 tons outstanding in 2002. Now, the entire central bank holdings are about 32,000 tons. So according to Veneruso, in 2002, half the central bank gold is already leased. Right? So now what we have is that leased supply is likely what's finding its way to China through Switzerland, where the LBMA good delivery bars are remelted into essentially Chinese spec kilo bars and then sent through Hong Kong into China. So that's what's been going on these number of years. Now, given that China is trying to build up its reserves and some officials from the Chinese government have said their target is to get to 8,000 to 10,000 tons. China has been accumulating, and it's not in China's interest to have the gold price go up just yet. Okay, so it's in their interest for the price to stay down while they complete accumulation. Once they announce what their holdings are, then the cat's out of the bag. And at that point, I expect the gold price to take a major jump. It's not going to be a stair-step increase in the price like we've had in the past. It'll be one Monday morning, there'll be an announcement, and the price of gold will be double or triple today's numbers.
So we're getting to the moment of truth then. And why are they going to disclose now? You have to bring us up to date on that.
Well, they have to. So the issue is the IMF is working toward making the SDR the new reserve currency. And the SDR would be consist of a basket of currencies with each currency having a certain percentage of the SDR based on, a very convoluted formula. But within that formula, the gold holdings play a critical part. So in order to have the greatest representation, first of all, China needs to get approval to be part of the SDR. And secondly, then it's what percentage they will represent. And this is where the various people like Jim Rickards, and there's other studies being done, that China needs something in the order of 6,000 tons to have a meaningful stake in the SDRs. The schedule is that there's going to be an unofficial meeting in May, and it's expected that China will have to disclose to the IMF what the gold holdings actually are. And then there's the official meeting somewhere in October, which will then give final approval for the inclusion of the RMB as part of the SDR.
So they really have no choice. They've got to include the renminbi in the SDR, right?
That's
Gotta
right.
be.
That's right. So both the IMF and China are working toward that. At the moment, the U.S. has veto power over any resolution at the IMF. And the IMF is trying to pass a resolution to remove that veto power.
Huh. So is this going to lead to stalemate, war? What's going to happen?
Good question. There's going to be a conflict over this. There were supposed to be changes in the system, and the U.S. has been stalling approving these changes for over 5 years. So this is something that's coming to a head now.
What's going to happen? Well, it sounds like it's inevitable that it's going to happen, though, isn't it?
That's right, and this is where there's two books on the subject people should read. One is The Death of Money by Jim Rickards. He talks about this at length in his book, and depending on what happens, the gold price, according to him, could be anywhere from $6,000 to $8,000 an ounce. And then the other book to read, which is more technical, more detailed, is called The Big Reset.
So we're heading for this, assuming it happens, and I don't see how it cannot happen. China is the largest economy in the world now.
Right, that's right. So this is inevitable, and like I say, it's not just one thing that's happened. It's been many moves by China. They've entered 28 swap agreements. They've created an international development bank, initially established by the BRIC countries, but then the Western countries have all signed on. In Canada, they've established a currency hub that will exchange renminbi for Canadian or U.S. dollars. That's already being done. Russia and China together are working on creating an alternative to the SWIFT system, which they expect to launch next year. So all these are moves in the same direction. And unless people are aware of this and looking for this, you won't really find it in the mainstream media. You won't be able to connect all these dots and determine what is actually happening.
So, happening before your very eyes.
Right.
So,
apart from these moves, I find it fascinating because, like, we are still getting people selling their gold in order to buy U.S. equities, which I find just incomprehensible because apart from the old adage of buy low, sell high, it's not buy high and sell low. If you wanted to trade bullion, you should have done that when it was 1900. But bullion, physical bullion, is not for trading. You want to trade, buy puts and calls on ETFs or futures contracts, but do not sell your bullion. This is like canceling your insurance when you can already see the hurricane coming.
Or you can smell the flames, the smoke from the forest fire getting ready to take out your house.
That's right. So, but this is happening because the mainstream momentum is pushing that everything's fine, the economy is recovering, the markets aren't overvalued, et cetera, and people are buying that, and it's going to be devastating for them.
What about the recent increase, Nick, of the dollar vis-a-vis the rest of the world's currencies?
Well, that's simply happening because U.S. dollar is still the reserve currency. But the problem is all the other countries are in such worse shape that, people are exiting those currencies and buying U.S. dollars for the moment. Typically, there's a lag between moving into the U.S. dollar and subsequently moving into gold.
So
you first move into the U.S. dollar, and then you decide what you can do. But it's kind of like the best house in a bad neighborhood. The U.S. is the best currency, like as compared to the euro, the yen, or anything else, right?
Yeah, so everything Rickard said was true then, and he was spot on.
That's right.
Interesting. That's what I find fascinating is you don't always know who to believe, right? When you see a disaster happening, there's a lot of voices expressing many opinions, and who do you believe, right?
Well,
that's the problem.
What you have to do is, see, most people don't listen to the other voices. They only listen to the mainstream media, watch their TVs, read the newspaper, and you won't get any of these views there. So you have to go to the internet and look at the alternative sites. Some are good, some are not so good. But you then look at them all, and then you make a decision what you want to believe or not believe once you've read both sides of the story. But if you listen to only the mainstream side of the story, you're going to end up with a lot of financial pain down the road.
Yeah, well, one thing you know is that what passes for news in the mainstream media is like what passes for food in fast food restaurants, right? If you eat it, it'll leave your stomach full, but it won't really give you much nutrition. And that's
and it'll eventually kill you because you get cancer or something.
Yeah, or any other multitude of popular maladies, and that's what the mainstream media is doing to you. They're killing you on a flow of information that just is out and out lies. Right. It's really sad. Really sad.
That's the critical information, and if you want to get closer to the truth in terms of your basic statistics, people need to visit John Williams' Shadow Stats site.
Oh, I know.
If you go there, you'll see that the inflation rate is actually 8%. The unemployment rate is actually 23%.
Yeah, well, underinflation. Underemployment. Yeah.
Right, and the GDP has been negative
for years.
Yeah,
well, we've been telling you that for a long, long time, and obviously, we've got a core following of 30, 40,000 people who've listened, hopefully, and done something. But hey, Nick, people get into jams. They got to sell their metals as much as they don't want to do it. They have to do it many times.
Well, in some cases, you have no choice. But if you have a choice, the issue is not to sell your metals in order to invest the money in equities or bonds or something.
Do anything but that. I mean, I don't give personal financial information. Just from my standpoint, hey, I'd do anything but. But yeah, it's amazing that it's happening that fast. That's the part that shocks me.
That's right.
And that's what I just find amazing, Nick, is that it could happen that quickly. But things have, we've been in this financial crisis for a lot of years now, Nick. A lot of years, and now it's finally happening where just as we said it was going to happen. I mean, how many times have I talked to you over the past 2-3 years? A lot of times, and it's really happening. That's the amazing part,
That's right. Well, some people will get extremely wealthy by taking action on this information, but unfortunately, most will get their entire wealth completely devastated.
It's sad. It's really sad, and it was avoidable because if you had wealth, you could have done something about it. What about what do you think will be the effect if you owe money, if you owe debt? Are you better off owing debt or not?
Well, that's a personal decision because there's kind of a logic behind it, and there's
you're pretty savvy, though.
The emotion. So the issue right now, it's better to be a debtor because you certainly aren't making any money being a creditor.
Right.
And and eventually, like the government, wipes out or forgives the debt, and the taxpayers end up holding the bag.
Right.
So look at the mortgage situation. A lot of people that have underwater mortgages are now getting deals to just stay in their houses and pass on. So the fact that they are overloaded with debt hasn't really hurt them.
Yeah, and there'll be more debt destruction in the coming reset. There almost has to be, and I don't advise, and I wouldn't so much do it myself. Just go take on debt in the hopes of debt destruction, but that seems to have to be one of the byproducts of this whole reset. To me, I mean, it always seems to be a likely byproduct of it.
Exactly.
So, right? I mean, it's got to be. So, like I say, that's something you have to figure out for yourself. And I don't give financial advice. That's not my function here. I just am a messenger. That's the way I look at it. I deliver your voice, Nick, and other voices to people who care to listen. But it just seems it's much closer than anybody wants to even think about. And hey, one other thing I wanted to ask you, your opinion on recent implosion in the price of oil. There's so many experts out there never saw it coming. It's a hard trend to really get your arms around and really predict. But now that it's here, is it staying? And how do you make the best of it?
Well, I think it's short-lived because it was done by this enormous amount of financing due to cheap money and financing fracking. So you're going to have a cascading set of defaults in all of the drilling operation and the junior drilling operations that have borrowed a lot of money to do the drilling. So this is going to permeate through the economy. And it'll be a big negative because you'll have debt, everything from debt default through to unemployment at that in the short term. In the long term, you still need oil, and the risk for the U.S. is that the way the current administration is dealing with some of its major partners like Saudi Arabia, you could get a situation in the near future where OPEC announces that you can buy oil in euros, British pounds, yuan, or Russian rubles, as well as the U.S. dollar, and that's when there will be another major impact on the U.S. dollar and its status as reserve currency. It's only because of the petrodollar that it has that status. And right now, there's a lot of alienation happening with primarily the Saudis and the turmoil in the Middle East.
This is true. Well, Nick, thanks for the heads up on this. I think it's really important, the trends that you identified. Want to get more information on you, services that BMG offers. Where's the best place to find you?
Well, our main site is bmgbullion.com. But for your American viewers, they might want to visit our Bullion Bar site. And that's where they can buy individual bars of bullion and have them stored in Canada as well as about 6 other jurisdictions. And when this is properly done, which we have structured, there isn't a need to report it either on your IRS forms or you don't have to report it under FATCA. So that's a main difference and a concern some U.S. investors have.
Well, that's a really important concern for sure. FATCA can't emphasize the destructiveness of that little handy piece of congressional work there enough.
Exactly.
And
it's kind of an indirect form of currency control.
Oh yeah. De facto currency controls. Nick, thanks so much for being on, and you'll find the links as always in the show notes to this interview on financialsurvivalnetwork.com. And Nick, thanks for bringing us up to date on this. I had no idea it was moving this quickly, but hey, this is what happens in the modern world, in the new economy that we live in. Nick,
exactly right.
All right, appreciate it, and we will talk with you again soon. You be well.
My pleasure, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.